Good evening, everyone. You have joined PehchanTV. This is Business Today with Max Riaz. Like every Sunday, we will be talking to you about the most exciting things that are happening in the business world and the opportunities that you, as an investor or a business owner, can take advantage of. Last week, we spoke about Pakistan Stock Exchange, and we had our guest from Pakistan, from Ismail Iqbal Securities, Director of Research there, Satish Balani. I have him again today for this episode. Hello,
How are you?
Satish. Not too
Good to
bad.
see
How
you
was your
again.
week? Yeah, good to see you again. How was your week?
All good. All good.
Good, 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 good. Look, Satish, so last week we had a good conversation around, Pakistan Stock Exchange, the type of products that are listed, securities that are listed on the stock exchange. We talked about the governance and the regulation. It appeared that the regulation is, the regulators are getting very serious about compliance activity, lifting the image of the stock exchange for the international investors to really take a closer look at the market there. This week I want to focus on the volatility in the stock exchange there. I was looking at the returns for the past investment returns for the past 10 years at the stock market there. And in the last 10 to 12 years, actually 11 years worth of returns, Pakistan Stock Exchange has returned 7 positive years, calendar years. Um,
Yeah.
uh, and and compared to Australia, it had returned 9, positive years. So, it's not doing too badly. In terms of daily volatility, how bad does it get? How much does it
Uh,
move around?
Volatility, I think, is part of markets in general across the globe. But in
Yeah.
Pakistan, I think we have a decent retail-based trading on a daily basis. So that basically every news has some reaction. We
Yeah.
somehow like in some days we have a dull market, very dull market. So you might not have much of movement, but in some of
Mm,
the days it's there's a lot happening. So,
mm,
so probably it's sometimes it's sector specific news where there's reaction. Things
mm,
change drastically on the or globally as well. So these days,
mm.
like over the past 8 9 months, the world has had such a volatile ride. We have
Yeah,
had
sure.
COVID, we have had oil price crashing by 40 to 50%, and then rebounding by
Mm,
40% again, not coming back to the levels we had seen earlier. So all of the related sectors they generally get hurt or they regain in line with in tandem with
yeah.
oil prices. So those kind of things are part of markets. In Pakistan market, it's just like any other market. It's just that
But in Australia, sorry, in
yeah.
Australia, on average, you will get like a 0.5% move in the daily trade, right? So 0.5% or 1%. Is
I think
what's
we also get the same move,
mhm.
unless there are like 2 days in a year where you get 2 to 3% move in a day, and that is generally a big day for any big major heavyweight sector. So sometimes, like for example, when central bank eased interest rates drastically, like they were
Yep.
in just weeks, our interest rates halved from 13% to 7%. That happened across the globe, but we had highest rates in the region. So then
Mm,
we saw a lot of volatility because 25 26% of our index weightage is in banks. So obviously,
mm,
bank investors got jittery because then you see a lot of earnings depression coming in the near future. So you
mm,
get that kind of flavor. But
Mm.
generally, like since that is now past, and now we just see zero point 0.5 to 1% range movement on a daily basis, and
Mm.
that's how what generally markets are. But yes, I would say like we also have some political news influencing the markets, like at least over the past 3 years, when we had
Yeah.
MSCI event, we had Nawaz Sharif getting ousted. Those kind of news add some volatility, but that's part of emerging markets across the
Yeah.
emerging markets. I don't think it's specific to Pakistan. So that volatility
Yeah.
is there, but I think that's how it sometimes bad it gets. But yes, I think the good part for a foreign investor or any investor is that it's a fairly liquid market. So if you want an exit out of the market, there's no
Mm.
limitation. Like even for the past, like in past 9 months, on a net basis,
Mm.
foreigners have sold $370 million of shares, and all of that has been absorbed by local investors, individuals, insurance, which are long-term investors domestically. So
Mm.
so so
Mm.
I would say, and in 2012, 13, in just 1 month, like in May 2013, in just 1 month, we got what $270 million of inflow in a month. So that was
Wow.
easily. So that volatility is with the interest only. So I think
Mm.
those things go hand in hand. Sometimes it's just the event. Sometimes it's just the investment flows which drive volatility as well.
Mm.
Like if you in COVID times, if someone would have invested like 3 billion rupees of capital in our market, the volumes
Mm.
would have been like the volatility would have increased on the positive side. And in those
How
days,
did the
people want.
market? Yeah. How did the
Yeah, so
market go? How did the market go in the COVID sell-off in March this year? Sort of, it sold off obviously like everyone else did. Has it recovered completely, or has it? How much has it sort of come back?
it's mainly recovered. So if I give you just numbers, a bit briefly numbers. In January,
Mm.
the market hit a high of 43,000. It went down to
Yeah.
27,000 in March because of COVID. So it was 36% dip,
Yeah.
and today
Yeah.
it's up 56% and just 2% short of 1.5% short of the high it hit in January only. So
Right.
market is back on track. But yes, I would say one thing which is interesting in for us as financial market participants. We generally analyze that index may be at the same level, but the stocks which drove rally this time was different. So in past,
Mm.
banking stocks
Mm.
were hit hard, and recovery has been driven by cyclicals because interest rates are low. We have lower COVID
Mm.
cases now. We probably are one of the fewer countries which came out of COVID fast compared to other regional countries like India is still struggling, sad unfortunately. But we
Mm.
were out very sharply. So today, our cyclical stocks, the cement companies, where we see domestic consumption getting better, and then with interest rates
Mm.
lower, auto companies are people are expecting that auto companies will also do well because people borrow and get into new cars. So that consumption part is now driving the index rather than your banking stocks. And I feel just an opinion, since your audience
Mm.
is generally broad, and like
Mm.
banking stocks have they're not what you can say, they've underperformed, but they've still yielded 20% plus return since then. So they've underperformed,
Mm.
but that's still a good return since that March. So I think recovery part has been broad based, but some of the stocks have rallied too good. Like the response have
Mm.
been or the investment they have attracted is actually insane.
Yeah, there's three things I want to take up there. In Australia, we certainly had the banks get the battering because of the obviously the interest rates going to zero. So if there's interest rates are going to zero, the banks haven't got much to make their margin on, right? When they loan out.
Indeed.
So we got out of the banks in our portfolios in Australia. But yeah, I mean we've sort of re-entered, but not. It's still struggling as a sector. The other sector that has done really well for us is the consumer staples. Certainly in Australia there were people doing the runs on at the supermarkets, hoarding whatever, the toilet papers to everything else. that they could get their hand on. Is that something that happened in Pakistan as well? And were there companies that were consumer staple, like the supermarket? Are there supermarket companies listed on the stock exchange there?
They're not supermarket companies, but we have FMCG companies listed.
Yep.
So
Yep.
they did well. Like Unilever, they posted a 50% jump in their profits. So Unilever
Right.
Pakistan, it's an FMCG business. We have National Foods, which posted a strong earnings and margins recovery.
Mm.
So there are businesses which have recovered well, like the domestic driven Nestle Pakistan.
Yep.
They are gradually recovering from their dip in the profit. So pharma companies, I would say, they are doing well. They are recovering fast. So I think,
Mm.
in fact, we also have some of the nutraceutical companies, so which are basically selling vitamins. Pharma companies more specializing into selling multivitamins. So in this COVID, they were direct
Yeah.
beneficiaries of. They did well. Their profitability recovered well. So I think in a what you can say, we don't have a direct what you can say, we have a mall listed, but that
Mm.
mall also includes it's a real estate, basically. It's a REIT listed
Yeah.
in
Mm.
Pakistan, but they
Yep.
have struggled because it's a mall including offices as well. So offices
Yep.
were having their share of struggle, and malls also were having. They had a supermart, but obviously they had fashion brand as well, housed in the mall. So they were struggling on earnings, but they still posted decent results. Like only the last quarter results were bad, but now they're gradually recovering. So I would say
Mm. Mm.
the for us consumer staple, not the March,
Mm.
but the actual consumer companies which are selling those products,
Yeah.
they did well. They
Okay.
recovered well.
Okay, so industrials are doing well. FMCG companies have recovered well based on domestic consumption picking up. Um,
Yes.
another sector that's done gangbusters really well across the developed markets is the tech sector, as you know. So I know Pakistan is quite active in the tech VC space. But
Yes, we are.
are there any companies sort of in the listed space that are of the tech ilk?
Yes. Interestingly,
Yeah.
there are a few companies,
And do
there are
they
a few
make any
names.
money? Yeah.
Definitely. There's one interesting company which performed really well in whole this COVID episode, which is, and not, they were not direct beneficiary of this all COVID or any. They were not Zoom, but
Yeah.
they still did well. It's a Systems Limited. They make softwares, and they help businesses in automation. So they have
Mm.
call centers. They make what you can say, they also have, they build customized softwares. Like they have Middle East based business, they have businesses in US, they have business in Europe. So
Yeah.
they are doing well. And
Hmm.
but the re-rating part is been phenomenal over during these COVID times or post COVID. So that company was, that stock was trading at 100 rupees a share, and it's today at 300 rupees a share. So it yielded a 200% return in just six
Mm.
months. So that
Mm.
actually, that stock got the attention of the market of late. And
Mm.
it's basically, we have 4 or 5 companies. This is a relatively newer one, but
Mm.
their business model is so good that they're gaining export market share very strong. And
Mm.
they basically also capitalizing on the, what you can say, as you said, cheaper labor basically. So you have different tech grads in Pakistan. We are a demographically younger populated country, so they get younger lads at a decent compensation, which is domestically very good. But for good, it's a good competitive advantage that they have. So they are trying
Mm.
to play that. So
Mm.
they have a bunch of, what you can say, more than 3,000 employees who are developing softwares for different international clients, and then they sell those softwares and market them abroad. So Metro, which is in Dubai, so those kind of companies get their softwares made from Pakistan. There's another
Mm.
company, Evancion, which is doing manufacturing automation. So that is also one of the few companies which is under radar for different investors. That stock is also doubled of
Mm.
late.
Mm.
So tech stocks are limited in our market, but they've taken center stage actually. If
Mm.
not less.
Mm. In terms of the overall market, so you've got 25% of the market comprises
Banks,
of the banks, and then what's the second
15%, yeah,
largest?
yeah, yeah. I'll just tell you, 15% is by oil and gas exploration.
Oil and
12
gas.
to 15%, and 15% is held by fertilizer. So that fertilizer is
Fertilizer.
not just fertilizer. That also, because we are an agrarian economy, so fertilizer consumption is decent here. So those are big companies, but one of the company which is included or classified into fertilizers is actually a conglomerate, which is Engro. So
Engro, yeah, I
that
know them well. Yeah, yeah.
so that company invests in fertilizer, power. They are also invested in chemicals. They are also invested in food. So they have diverse range, but that is classified in fertilizers because the majority of the earnings come from fertilizers. So that is
Right.
one of the companies. So 15% is fertilizer. So we're done with what 55%, and then we have
Mm,
10% from cements. So that's 65%. We have pharma, which is 5%. We have consumer 5%, tobacco
mm,
2 to 3%, and then
mm.
other industrials, leasing. So a decent range of other sectors. But these are the main 4 5 sectors which basically drive valuations.
And in terms of the depth of each
Yeah, yes,
sector,
power. Six
yeah,
percent is power. Sorry.
power as well. Okay, so in terms of the depth of the sector, well, tell me how many in total, how many stocks are listed on the stock exchange. So by comparison, in Australia, it's around 2,000 odd. 2,000,
We have a
2,100.
roughly 500 or 550 stocks listed, and
Yep,
we are like over the past 5 years. I was looking at the data. We get 4 to 5 issues every year, roughly. In
four
the
to
bull
five
market
issues.
in 2015, we had 9 issues, but in
Mm,
bear year like 2019 was a bear year for us, so we had 3 issues only. So this is what we generally get 4 to 5 issues every year. This year
okay.
we've had one so far, and we are expected to have one more, like which is a steel-based business, which is coming. They want to fund their expansion, so that is coming up in the next 2 weeks actually.
Mm-hmm. So
So
these companies that are listing on the stock exchange, are they coming out of family backing, like they coming from a family fold, or are they coming from a? Is there private
it's a mix.
equity
It's a
entity?
mix. It's a mix. It's a mix. So if I just give you a context, like AGP Pharma, which was listed in 2018, had
Mm,
a professional investor who bought the company through management buyout, and then
mm,
he sold some stake to a private equity firm, and then
mm,
it was an unlisted space, and the bank
mm,
was also funding that private equity firm as well, private equity
mm,
fund. Then they got it listed. They got some of their stake offloaded into market. So now it's
mm.
listed, and private equity exited. Just how the model works. IFC,
Oh,
which is a DFI, they generally they also were equity investors in one of the rice exporter of Pakistan,
mm,
and they got
mm,
also listed in 2018. This Sagar Steel, it's a family owned. They are getting listed. So we have a mix of everything. Like often have people raising capital through equity markets. You often
mm,
see people divesting because you invest at the time of the project. You take the project risk, you complete the project, and then when it's making money, then you exit,
mm,
selling it at a earnings multiple. Today, like
mm,
Aga Steel, they have a smaller business, but they're going for a big expansion. They wanted to offload. Interloop is one of the good success stories of Pakistan. It's a sock manufacturer based out of Faisalabad. They
mm,
make 4% of socks manufactured across the globe,
mm.
and
It's a
they
it's a tough business, but it's a tough business.
yes,
Very
but
low margins.
but they still make good margins. They make 25 to 28% margins, and
Really? Okay.
yes, and they basically they did an IPO in 2019, and they were venturing into denim. So that was their forte. They were expanding their existing sock or hosiery facility, and they were also venturing into denim. I don't know what the recent numbers are or how they've been coping up with that, but but the entrepreneurship is encouraged through exchange because you generally get a good multiple, and your value gets unlocked as well.
Actually, I was quite astonished. I was shopping at Zara, the famous chain, Spanish chain, and I looked at this very, fashionable looking denim, and the tag actually read "Made in Pakistan." So I was actually quite
Yeah.
astonished that it was very. I mean, it appeared good, high quality denim, and so
Yes.
I must check who the manufacturer was. But yeah, okay,
But
that's very interesting. So the companies are IPOing 4 or 5 companies. I mean, that's not too. I mean, are these mega IPOs? What's the size of these IPOs? Are they small caps, mid caps, large caps? What
I
level?
think mainly lately we are having mid caps, like
Yeah,
4 to 5 billion rupees of issues, but the issue
yeah,
sizes are decent. Like this is a
yeah,
5 billion rupee issue. If the audience wants context, it's
mm,
roughly 35 to 40 million dollars of
mm,
issues. And the Saga Steel, which is coming up, it's also roughly 5 billion rupees of issue. So it's roughly
mm,
35 million dollars of issue. So this is the kind of issues we are getting. So these are the bigger size of issues, and on the lower side we get 10 to 15 million dollars of issues. So this is just the range what recent has been. In past we have had bigger issues also, like HBL, secondary public offering, which was done by government. So government had HBL stake
okay,
post privatization as well. So they wanted to sell off. So that was sold off in 2015, and that was a $1 billion plus transaction. So this is the
mm,
it was secondary market. So you have strategic investors as well. Currently, government is also targeting investment. Like government is planning, not that they're sure of it, but recently cabinet committee approved a transaction of largest oil and gas company of Pakistan, which is a government owned. We already have those shares listed in stock exchange, and they are planning more of issuing more and bringing some strategic investor on board, so that like Petronas or PetroChina kind of
yeah.
companies are interested in that in those issues, so they can come on board and help those Pakistani oil and gas companies do or develop more expertise, or like learn more from them how good practices are.
I think that's something that Pakistan government should definitely explore. That to privatize, these government-owned big utilities or assets. I mean, for comparison, in
And they're
Australia,
decently
yeah,
profitable actually. They're decently
yeah,
profitable. If I just give you one
exactly.
of the examples, like OGDC, it's a they make roughly what you can say 4.3 billion shares they have, and they make
Mm,
16 rupees a share, which is at a $30 oil price. This is the
mm,
profitability. So the profitability or the operating costs are very low. Gas heavy companies, they make good rupee returns, or even dollar denominated returns. They get pricing that is dollar denominated locally. So
mm.
I think these are good assets which can be sold off, and private sector can basically take these assets to new heights.
Exactly, and that as I was about to say, that in Australia, one of the largest, well, the largest telecommunications company, Telstra, used to be owned by the government. The Commonwealth Bank, which is the largest bank, used to be owned by government. It's been privatized, right? So, it's the right thing to do if the government is cash strapped, and also I think it's good
It's good
opportunity
for
to
the
get
company
more
as well.
depth. It gives more opportunity or depth to the exchange as well, to have these
Indeed.
long stable
Absolutely.
businesses publicly owned. In terms of, just my last question is that institutional investors. I mean, where do you have foreign investors coming from mostly? Which part of the world, and what are the sort of big names there? Or
We have investments from across the globe, mainly like
yeah,
the main
yeah,
centers. If you align centers,
yep,
like US is one of the big major markets. The global funds which are targeting emerging and frontier markets, they are investors in Pakistan.
mm,
Hong Kong is one of the key markets. Singapore, we
mm,
have Singapore based. UK based, like HSBC is one of the investors in Pakistan
mm,
market. So these are the from country perspective, these are the main four markets which are investors in Pakistan. If I talk the institutional names, like
mm.
Templeton Fund, it's one of the mainly regarded
Yes,
names.
massive, yeah,
Lazard,
value fund, yeah.
Lazard is one of the key investors. HSBC, I told you, we have what we can, from maybe I can name Vanguard is one of the most active investors, and Vanguard passive funds, which are globally. So since Pakistan is
Mm,
part of emerging market basket, so passive funds also flow into Pakistan. FTSE is one of the tracked
mm,
indices. The FTSE tracking indices, they also invest in Pakistan FTSE emerging indices. So we have decent foreign investors following. But lately they have been selling. They have been selling. I would tell you, like, I should tell the investors. Lately we have been having a lot of selling over the past 3 years. But that's also
mm,
been in tandem with the macroeconomic risks rising. Since we had a political transition, we had IMF coming in for a bailout, we had
mm,
currency
mm,
depreciation, which was 50% odd, interest rates doubled. So now I think we're out of
mm,
that phase. We are into macroeconomic stability part. Our current
mm,
account is under control, remittances are
mm,
good, trade balance is improved. So growth is gradually recovering. We're out of COVID fast.
mm,
So things have improved. So we look forward to getting things back on track again as we move. And we
mm,
are seeing, like just like yourself, we are seeing a lot of investors taking interest in Pakistan again. We
mm,
are getting questions. We are getting a lot of queries like how do you see, like as an independent research guy, I also have responsibility. So we are also getting a lot of queries now as again. But this is how it
mm.
has been. So people are active, and so buying and selling is the decision end of the day. But I think actively, it's under the radar at least.
Yeah, look, from our perspective, I mean, our firm and your firm have been talking for over a year now, and for us, it's a journey that we wanted to take, and get more familiarity of the market there, and get more knowledge of it. We have traditionally haven't invested in the sort of broader emerging markets, and where for the reasons I mentioned in the previous episode, we are now beginning to look at it more seriously, and certainly our investors that invest through our funds are looking for that extra alpha, are looking for the extra bit of return, because developed markets are generating close to zero.
True.
And if you look at Japan, I tell people about Japan all the time. Japan has had monetary and fiscal policy, a zero monetary policy and fiscal deficits for into the oblivion for a very long time. And much of the other part of the world is following similar sort of tactics. And I think you could be in a position where markets go cyclical, the US and the European markets particularly, which would mean if you don't play the tactical cycle tactically, then and you're just going through the passive approach, you've got an ETF exposure and just passive approach, then you might not end up anywhere in another 20 years. But if you come in, go out over multiple year periods, then chances are that you'll get a decent return or start to look at other alternative markets such as Pakistan Stock Exchange and even India. So yeah, look, thank you for
True.
your time. I appreciate it.
My pleasure, Max.
I got a lot of information out of you in the last couple of episodes, and we'll see based on the demand. If the people want more depth, we'll certainly get you back onto the show and keep exploring deeper.
It was my pleasure to be back.
Okay, thank you, mate. Cheers. Have a good
Thank
one.
you. Thank you. Take
Okay,
care. Bye.
bye bye. Bye bye.